159. good morning, everybody. Welcome back to the live stream. Hope you guys are having a good day. As usual, if you can hear me, give me a thumbs up so I know that we are good. Welcome, welcome. It is Wednesday, and we're about to have a great morning. So I just want to start off with that. I have to flex a little bit on you guys. Well, cool. Nice to have you guys here. I'm going to be going through some interesting things that I had found through my research. Can't wait to show it with you guys. Welcome. Good morning, everybody. Yeah, I know his music's pretty fire, huh? Music's been sponsored by Type 9 today. If you haven't checked him out, he's on Type 9 on Instagram. Check him out, man. He's got some fire beats. I really liked it. Let's get into it, man. I'm just gonna try and keep this stream as short as possible. Ask as many questions as you guys can, so that when I get to that part, we will be cracking. So, just wanted to break down the news really quickly. The main headlines on Bloomberg is pretty bearish. We have evidence mounts that the global recession is already here. Well, yeah, we kind of knew that was coming. And then we have, Boris Johnson, who's in critical care in the UK. For many of, if this is your first time on this live stream, by the way, my opinion on reading the news is for its entertainment value. And I don't usually follow what the news says because I pretty much do the exact opposite anyway. Majority of the time, the news is trying to mislead you. Well, the news continues with a bearish slant on the narrative. We are seeing, majority of news outlets pouring bad news and confirming that the economy is going to a recession. We have the U.S. Confirming about 400,000. Approaching 400,000 infections, which is quite a big number. And then China has lifted its lockdown, even confirming that people can still get infected without symptoms. They still lifted a lockdown, which is actually pretty scary to me personally. I'm going to be staying indoors for the next month or so, working on more content for you beautiful people. So the news on face value looks very bearish, but as I said, we don't really follow the news that much. We are going to concentrate on our macro analysis and then go into our technical analysis, and then we see what happens next. So today the topic of discussion is going to be emerging market capital that has left at an alarming rate. This adds on to the sentiment that smart money does not know where to go right now. That's the issue. The issue is not that we're bullish or bearish. The issue is that many money managers or people who are trying to make money do not know where the returns are. Now, in the past, emerging markets are always a staggering return. We are looking at approximately, between 20 to 40% return on emerging markets in a year. Year to date, let's say in the past 5 years or so. And the interesting thing to note is, this is the ticker that I track for emerging markets. It's by JP Morgan iShares. So the interesting thing is that this coronavirus shock has hit this asset market so hard, especially, the fact that these are emerging countries that are coming out of their statuses. But they carry higher risk, hence the higher reward. The main thing here to see is that there has been a staggering relief of capital from these funds. And you might think that this is like normal because of the fact that people are taking a risk averse kind of a stance on this. But just to give you a comparison, there has been $83 billion flowed out of this fund ever since this dip. And in comparison, in 2008, we only had 60 billion flow out of the same fund, which means to say, there has been a lot more funds flown out of this specific index than any other time in history, which is not the case for SPY, which we know, okay? And the issue is that, because of this, the data suggests that, the equity markets of India, Taiwan, China, Korea, Brazil, these are all emerging markets on the debt side, they saw some of the biggest outflows. And, these are countries with large FX reserves, which have been trying to resist the local currency depreciation. And so in order to, smooth out liquidity, they have to have FX intervention. Now, why this is a problem is because it kind of messes up the parity of the dollar versus other currencies. And so hence you have seen, the dollar spike on such a short-term basis. So, I just wanted to cover this really quickly because this amount of money that has flown out of this ETF is actually pretty staggering. And transparency on FX intervention is also pretty poor because FX reserves are largely held in U.S. government and agency debt. So any changes in those holdings can provide some kind of insight. And the shift in Q4 last year from the emerging markets is now leaving us with the question on where all this capital is going. Now, in other things that we have to cover, VIX has retraced back down to the 50 moving average after it had a crazy monster run up. We see it now kind of hugging closely on the 50 moving average, which shows possibly a bounce or maybe a break below, which would be extension to the downside. Bonds, on the other hand, have been seeing a steady influx, which makes sense. As the Fed continues its piling onto its balance sheet, we will see a further purchase of treasuries, and I expect bonds to move higher over the time as more stimulus comes on board. That would result in the same with bonds getting priced higher as rates start to drop further. As we know, bonds and rates have a inverse relationship. So the higher the price of the bond, the lower the rate, and that's just how things go. And now gold also has been seeing some influx, which also kind of makes sense. People are starting to take a little bit of risk and putting some money into gold, even though it remains a safe haven. Now, the situation at crude oil still remains the same. We do not know if Russia and OPEC will reach a deal. In my opinion, it is slightly unlikely. In fact, it is in Russia's interest to hold this off as long as possible. As I have mentioned in my previous live stream, Russia has half the production cost of that of any nation in the world. Not only that, 30% of their GDP is oil exports, and hence it is in their interest to hold these prices down, to squeeze all the players out of the market so that they can reign supreme. So that kind of concludes the macro approach, macro analysis. Let's look at some technicals. We actually played with the idea not long ago that we might see SPY bounce to the 50 Fibonacci retracement. And honestly, I didn't think that it would actually happen. We tried to actually go there yesterday, and then we failed when we came all the way back down. Now, what we have is a inverted hammer on the daily, which is if on the top of an uptrend, usually signals a strong reversal pattern. And if you want to learn more about candlesticks, I have an entire video dedicated to that on my channel, breaking down these candlestick patterns and all this good stuff. So we'll have to see where this candle closes. If this candle closes below this body of this candlestick, we will see an extension to the downside. If this candle closes above this, then we will see where this market decides to go tomorrow or throughout the whole week. Now, do take note that this week is going to be a short week. On Friday is Good Friday, and hence the market's going to be closed. So expect a lot of volatility to be squeezed into 4 days. With that being said, we also have to take into account that there's still a possibility for an extension to the downside. However, since we didn't go up to test the 50 Fibonacci retracement, there will also maybe an equal opportunity for this to go test the 50 Fib before coming back down. So there are many ways this can play out. We are no fortune tellers. We play what the market gives us. As I have mentioned before, the major reason why we are continually bid up is because of the low volume and lack of sellers. and this causes definitely issues within the market when there are no sellers and only buyers. If you haven't been on Option Swing before, which is a trading community that I'm a part of, I would highly recommend to take a stab and try it out for a month. We have some great traders on board here, and a stock bot, which is I'm about to show you why it's so beautiful, where you can pull up all kinds of information. So as I was showing you guys in the previous live stream, the open interest for SPY has been consistently bearish. This is what it looks like. We have bearish betting all the way through April, and then continuously all the way through the first week of May. Even actually, you can just say we're bearish on the market for a long time, and so expect more squeezes and then a rug pull at the end of the squeeze where everybody sells at the same time, and then we hit like a circuit breaker or something like that. So you got to be careful. Make sure that you don't follow these flow channels too aggressively in like these times, because of the fact that these players are bigger players. You can see their entries, but you don't see their exits, and those are pretty troublesome sometimes. Cool. So we covered most of this stuff, and I want to take some questions now. Spend some time taking questions, and then we can move into maybe some other concepts. I wanted to actually go through with you guys some concepts about choosing maybe strikes, or maybe doing a little bit of Q&A about what you guys think about what we should do for the next live stream. So let's see what we have here. All right. Would you agree the market has started to ignore all bearish news? Well, the market has I wouldn't say they're ignoring the bearish news. What's happening is that the assumption is that the bad news is somehow already priced in, so to speak. I hate using the word priced in, but that's the best way for me to explain it. It's baked in, right? You have to understand that the market always foresees what is about to happen, and all news is instantly reflected in the stock price. So whenever news breaks, that's when the market shifts its sentiment. Now, unless we get some confirming dire news, which, by the way, I think the number of deaths and the assumption that more people are dying and the economy is going to be shut down for a longer time, that doesn't make the market move for some reason right now. However, if markets stay closed for an extended period of time and we see another stimulus package being passed, now that may be cause for an extension to the downside, just because of the effect on the money supply. Cool. I don't think it ignores. Let's see. Okay. Yeah, I answered that one. What do you think of IQ? I actually really love this company until I read a report yesterday by the same firm that was investigating Luckin Coffee, said that IQ is also now suspect for fabricating its financial statements. And honestly, I've been following this company for a long time. If you were from Option Swing from the beginning, I actually had a long position in IQ for a while, and then I got rid of it when I kind of made some choices to change my portfolio. And the thing is that this is a solid growth company to invest in, and I really like the economic moat that it has. But now this whole thing with its balance sheet being possibly spiked, and that makes me feel a little iffy about it. So in terms of the financials, it seems to be a company that's coming out of its negative cash flow burn and has a very bright future. But if indeed it's been falsifying documents, then that's a much bigger problem. So that's my take on it. How would you suggest to get disciplined while day trading? Great question. So one of the ways that I like is, first of all, shortlist, a list of stocks that you like, and shortlist 10 companies that you like, first of all, 10 companies that you really have an interest in, and then start by following those companies. Start by, intimately knowing how the price action goes and seeing how the buyers and sellers in that market are reacting for those stock prices. Now, after a while, what's going to happen is that you're going to see, you know, you'll get used to the fact that, you know how this stock, for example, is behaving, right? For example, for me, one of those stocks tends to be Tesla, right? And I know many people say Tesla is like really super unpredictable, but after following Tesla for a long time, I tend to, trade this stock quite a bit because I enjoy the risk and reward that it gives me. And so, by analyzing how the stock flows, you can kind of know how it's going to behave in the long run. On top of that, you need to do some fundamental analysis, which is going to be, knowing the balance sheet, the income statement, statements of cash flows. And then, you start to kind of get a clearer picture. And when you are day trading, you should always set a stop loss and follow that stop loss and respect it. Okay. Other things that you want to do is make sure that you have good position sizing. Don't go committing more than 5% of your total portfolio on any single trade. If it's a scalp, that's fine. Like, you can take a bigger position, but make sure that you're in and out quickly. Have a plan for an entry and for an exit, and know what is your risk to return ratio. Those are key things. Okay. Let me try and see if I can get this to work. Cool. What direction do you think for QQQ today? Well, QQQ is an interesting one. So QQQ, if some of you don't know what QQQ is, it's the ETF for NASDAQ. Now, just want to get this out. Well, QQQ is probably going to open a little further down than where it is. I think that QQQ is going to follow exactly what SPY and NASDAQ do, which is, what it does. NASDAQ and SPY kind of move in tandem. But, a more easier way to look at this will be here. If we break above, 8,150-ish on the NASDAQ today, then we will see an extension to the upside. If not, we're going to see extension to the downside, perhaps to retest the 200 moving average at 8,000-ish. So you gotta play it like that. If it breaks below, you take the trade down. If it breaks above and bounces on the 200 MA, you can take the bounce up once again. Let's see what else is there. How will more countries defaulting on their debts affect the U.S. if that happens? So you have to realize that the world economy is a interconnected web. Now, if more countries around the world default on their debts, then what's going to happen is they don't have money to do imports or exports. And they would have to, definitely take a good chunk of their money and spend it on stimulus for their own country. Their central bank would have to, stimulate the economy somehow. Remember, no spending means somebody else doesn't get that money. And if somebody else doesn't get that money, then that other country would be the US market. And if the US market doesn't have trade, then the US market suffers as well. So defaulting on debt is one of the biggest problems in the credit cycle. And it's coming. It's definitely coming. Seems that the virus news no longer moves the market. What could move the market now on? Well, it's kind of ironic that I must say this, because I said this on the previous live stream that I did. At this point, all bad news is causing the market to spike, which I had said the end of a bear market is usually because of bad news, and then the end of a bull market is usually because of good news. So we need some good news to come out so that we can have the opposite reaction. Would love for you to share your day trading strategy, since that would be a smart thing to do in this market. Yeah, sure, definitely. I can go through that. So for day trading, I typically have a list of 10 stocks that I follow. I wait for entry positions. Let's just, pull up. Let's just say that I want to trade Roku today and I'm following Roku. Okay. Now, I have this indicator set up, and, just to see, yesterday on closing, Roku had some good buying volume. So I actually expect Roku to open up green today. And then if I see Roku has bounced on a support, these green lines here are supports. I have indicators that do that for me. If you're looking for the indicator setup, it's in my Everyday Growth channel. Just scroll up here and you'll see it. It's in the middle somewhere. So moving average, 50 moving average has crossed over the 150 and 200 on the 15-minute chart. That's for a day trade time frame. We have a bearish kind of a formation. The thin blue line that you see is the on-balance volume, which has been steadily increasing. I like to play these kinds of moves because they are good setups for a short day trade. So we saw Roku try to break this the previous day's high at 93.50 or 93.60, and it failed to do so and came back down at the market open. So at the market open, it opened up, gapped up, and then came down, and then kind of had a bearish trend, followed the market down. Now today it bounced. Well, yesterday it bounced on the support at this level right here, and it's showing that at the end of the day yesterday we can check to see if OBV actually did go up. Well, actually, yeah, this is looking a little bearish to me, but it's fine. So here's one thing that you can get tricked on. You see how this bar is a green bar? It would say, oh wait, that's bullish, right? And then you see the OBVs pointing upwards too. That's actually increase of volume. That's, oh, okay, so it was bullish volume. Nope, it wasn't. It was actually bearish volume. If you look at the last 4 or the last 10 minutes of action, it was actually volume coming out of Roku, and there was volume coming out the entire 30 minutes or 40 minutes before the market closed. So these are ways that you got to be careful of. However, it's still a good play for a short upward trend. The risk to reward is great. Now, how do you calculate the risk to reward? Let's say you enter the trade here, right? Now, let's say you set a stop loss. Your stop loss has to be below your entry point by a distance, right? So let's say that your stop loss is there. I'm going to try and do it with this instead. It'll be easier. So let's do array. Okay, cool. So let's say your entry point's here. Okay. And then you have to mark your stop loss at basically where you see the next support, which would be somewhere below this level here, right? So let's just say that the support is somewhere here, 86.06, and then you have this here. So this over here is your 1R distance, okay? This is your distance between your position open and your stop loss. Now, in order for this trade to be a winning trade, and if you take 10 such trades to be a winning trade when you're day trading, you have to make sure that your distance is always, your distance of loss is always 1 versus your profit, which is going to be 2. So if this is approximately 87.50, that means $1.50 of downside. You need to make sure that your upside is at least $3. So we're looking at 90.50, right? 90.50. Okay. Let's just, I'm giving approximate numbers. So this would be 2 times. And now if you look, this actually coincides with the 3 times that Roku tried to break it, which is actually a perfect profit target area. So this is how you do a setup for your day trade. Okay. Essentially you acknowledge that you're going to take a risk of 1 distance from your price entry downward, and then you set your take profit to be twice the distance, which is 2R, above your entry point, which is here. Okay? Now you have to be disciplined, set your stop loss. If Roku comes down to touch your stop loss, you're out of the trade. You don't even look at it anymore. You just move on to the next setup. But these are the kinds of setups that you can take. We have a bullish formation, moving average moved over. You have signal of a trend going to the upside. You have possibility of some nice volume building up the previous 2 days. And then Roku is a stock that has been kind of spiking prior to this. If you look on the daily, so you can see a possible upside here, right? So yeah, that's essentially how you would go about doing your setup for day trades. Okay, that's just a brief idea. Let's see what else we have here. How do you think the future will play out with cures, vaccines coming out, and then all the bad earnings for companies coming in the future? Well, this is a good question. So the thing about the cures and the vaccines is it's going to be a long time before that comes out. So you want to, definitely you want to definitely keep in mind that that's not coming out anytime soon. I don't see a cure or vaccine being approved until like August, like September even, because it takes time for clinical trials to be passed, stuff like that. It's going to be a process. And then don't forget that once the vaccine is found, there's going to be the issue of rolling out the vaccine. Who's going to produce it? Who's going to get the patent? There'll be a fight. The government's obviously going to say, okay, you know what? We can't just give this to one company. They have to give it to several and then ask them to mass produce it. So that together with the bad earnings that are already expected is going to possibly cause downward pressure on the market in the future as well. That's the reason why I am bearish. I think that we're going to enter a bear market instead of having a V-shaped recovery, which is improbable at this point. By the way, if you guys haven't already subscribed, please hit the subscribe button and click on that like button so that I know you like this video. Also, if you could leave a comment with something that you want to see in the next live stream, or just simply leave an emoji, man. Like, honestly, it would make me so happy. Thank you. Let's say you take a position during a sell-off. What do you use to see if a sell-off is continuing? How to use level 2 data? Do you use it? I do use level 2 data. So for a sell-off, let's see if I can try to explain it. Now, understanding a sell-off is about understanding two parts, okay? There is a wave analysis that you need to do, which is understanding that the market never moves in a straight line. Okay, if the market wants to go from here to here, it never does so like a straight line. It always goes like that, like that, like that, like that, like that, like that, right? So you have to understand that whenever you see the first of all, you have to understand first that is that the top. And how do you figure out if that is the top? You got to see if a significant resistance level, for example here, is attempting to be breached, but it's not successfully being breached multiple times. Now, the rule of thumb is that you want to see at least 3 attempts. 1, 2, 3. This was more than 3. Maybe 1, 2, 3, 4. We had 4 attempts here, right? This is not really counted. 4 attempts to be breached and it didn't breach, and you wait for the candle to close. Okay, now at the end of this candle here, where it opened up here, you would see that the price action would be pushed up. Now, the reason why it's pushed up is because on this bear candle, there was so much of selling that there are no more sellers left, and hence buyers came in to try and bid the price up. I'm just giving you an example of how I'm reading the candlesticks, okay? I'm giving you a breakdown on how you would see a trend reversal and if something is going to continue to sell off, okay? Now, if, for example, that green candle comes out and you see this make a lower than that and it stops breaching this high, you know that you can take a small entry on a bearish position at the open of this candle, okay? Small position here. Okay, and then you ride this wave down, right? Now, the thing is, nothing's going to go down like fully go down. So whenever you take this small position here, you're going to wait because you have to confirm that this is indeed going to form a down channel. And that's what happens, right? You always have a low broken and making a low, and then a lower high, and then a lower low. So you want to make sure that, you see the formation of the second wave, this is an impulsive wave. We call this an impulsive wave, okay? And then we call this the corrective wave, okay? Now, on the corrective wave, it's always good to add more as long as you see the resistance. Now, if you see that, once again, unable to break 1, 2, 3, 4, this was strong, right? 5 times it was unable to break. Then you can confirm, okay, you know what? This is going down. So you can add to your position here. It doesn't matter where you add, but you add to your position here on the next wave, because you took a small position here to test and you set a stop loss above this level. You make sure you never set your stop loss like super tight, because market makers know that you're setting your stop loss there and they will just bid it up to break your stop loss. But the idea is you take a small position here and then you add to your position when you have a confirmation that it was unable to break up above back here. It wasn't able to break here. So once you add to your second position, you can write that wave down. That is a basic idea on how you can tell if something's going to continue its trend down. Okay. Earnings season is coming in. I hope it's not going to be brutal. It is going to be brutal. It's definitely going to be brutal. Earnings are priced into a certain degree here. I have mentioned this on my previous live stream. Actually, I didn't mention it on my previous live stream. I actually mentioned it on the everyday, the educational chat. Now, the thing is that many analysts are going to be pricing in the bad news from earnings. However, you have to realize that, if even the analysts get them wrong, then it's going to be really terrible. So, how to create a watch list for scanning stocks of interest? Well, creating a watch list is a personal criteria that you have to kind of play around with, because everybody's looking for different things on a watch list. Are you looking for something with volume breakout? Like it depends on your strategy. And remember, no one trader's strategy is the same. Everybody has a different strategy. Like, for example, I vary between day trades and swing trades. And based on my trading strategy, my watch list would be different, right? So it really depends on what kind of a strategy you have for trading. How do you feel about Allegiant? Let's see, Allegiant, couldn't find that. Allegiant, is this the one? ALLE, is that the ticker symbol you're talking about? Not sure if that's the one. Let's see. We'll do a breakdown anyway. Allegiant. Oh, okay. I don't know if that is the one, but let's see. So, by the way, if you guys haven't already checked out the YouTube channel, I highly recommend you to do so. I have a lot of good videos on there, and I'm working on some more for you guys. The next one that's going to come out is going to be about moving averages, the basics of them, and how to use them. So make sure that you check it out. ALGT, okay. ALGT. Oh, there we go. Oh boy, this looks terrible. Yeah, it's going to continue to, it's going to continue its downward trajectory the way it's looking. This doesn't look very hopeful to me. You could take a possible short-term bullish position up to 102, but I wouldn't try to time this. It looks very dangerous where it bounces on the 150 moving average. It hasn't even come up to test the 200 moving average. I would wait for this specific one. I would wait for the break above the 200 moving average, which is the red line that you see here, and then a formation of a higher high pattern moving upward. But I don't see a reversal in the books for this one yet. I would be really careful. If you want to play it to the downside, you could probably play it to the downside. That would probably be a better play, honestly. But it's a travel company, and right now travel is zilch, so I don't recommend playing this ticker. Cool. So do you guys have any more questions for me? If not, I'm going to try and keep this stream as short as possible. Thank you guys for tuning in. Love all of you guys. Once again, subscribe. If you haven't checked out optionswing.com, check it out. Great group of traders. I'm a part of it. If you want to hear more from me, go head over there. Oh, there's one more question. Do you have any long-term swings in this current market? I'm swinging long-term puts for May 1st for SPY, and I am swinging Gilead Sciences for next year, January, because I like the company and what it does. And I like the drugs in the pipeline apart from coronavirus vaccine. I like the rest of the drugs. And bonds. I'm swinging TLT calls for mid-April. which are, I believe, 168 calls. So yeah, those are what I'm swinging right now. Do you see Tesla going with pay cuts? Oh, that's interesting. No, I don't see Tesla going with pay cuts. I think Elon is very aggressive with production numbers. If anything, he's going to try and hire more people. In fact, he's a high risk, high return kind of guy. So I expect Tesla to actually retain majority of their pay structure. Do you use a trading journal, and if so, what format do you use or recommend? I don't actually use a trading journal. However, I do keep track of my, my trades in terms of how I'm doing that on a weekly basis. So I write them down, and then I kind of do a postmortem on them once a week. So just print out your trades for the week on trade history, and then look at them and see what you could have done better, what kind of entries you could have taken better, that kind of thing. SLV, what's SLV? Oh, silver. Okay. Yeah, silver is at the moment, I believe it's going to be more sought after than gold even. Definitely you could buy silver for long term, but remember the upside on this one is if you're playing options, it's not going to be a very lucrative contract because the dollar move is very little. So be careful. Thanks, no problem. What are your thoughts on Boeing? Well, Boeing was a really great buy at $100, and I'm really waiting for Boeing to come back down a little bit so I can take some $200 calls for next year. That's what I'm planning for Boeing. So the best play for Boeing would be to wait for Boeing to dip a little bit more, come down to test this again, 120 zone, and then add some next year calls. They're expensive, but they're worth it. Like I think the last time I saw it, when Boeing was trading at 90 something, the $100 calls were trading at $3,800, and then when Boeing spiked up to 180, those same calls were worth like $12,000. So you would have like quadrupled your money there just over a week, honestly. Tesla is already cutting pay and furloughing. Oh boy, okay. Well, if Tesla is doing that, then God bless their company. It's gonna definitely affect their production numbers, but because many people think that Tesla's factory is like fully automated and stuff, but they do rely on workers to get their cars out because there's a lot of manual labor involved in car making. There are just some things that a machine can't do, like with bolts and nuts. So it might actually affect Tesla in the short run. Just be careful with this market, guys. It's very choppy. We're gonna see lots of buying and selling and low volume plays that are just very gruesome. So be safe out there, and I'll see you guys on. Oh, okay. Let's see. Looks like cybersecurity is making a comeback. ZS, CrowdStrike. Do you think they will keep going up? What's ZS? Zscaler. Well, okay, so here's the thing. During this period of time, actually, the good plays are cybersecurity and the likes, because of the fact that many companies are online now. For example, look at Zoom, right? They had a huge amount of influx of users, and then a week later or 2 weeks later, their company got shut down for having privacy issues. So these companies that capitalize on cybersecurity are actually going to be good plays for this period of time. So actually, I like the idea. They might keep going up. You never know. ZS though, you want to make sure that you don't enter calls at this point. As I said, the risk to reward ratio here, unless it breaks above this level with good volume, which is the 66.5-ish, you don't want to take calls here. Remember what I said about risk to reward. Let's say you entered the trade here, right? Let me try and get a good color here. Black. Okay. Let's say you entered the trade here. Oh, yep. Let's just say here. Okay. Then you set your stop loss here. Where is your reward to? Here. Let's say it goes up and then takes a U-turn down because of this resistance. Your return to risk is 1:1. approximately. That's not a good risk to return. That means for every dollar you risk, you're getting a dollar out. So be careful. I would wait for either the break above or you wait for the rejection and then play the next wave. This one's kind of tapped out at this moment. The thing that stood out was the bid ask was considerably closer than every other option available. Most were $1 plus. Yeah, that's probably because there's more volume and open interest for those contracts. So people are more willing to trade safe haven assets like silver and gold right now. Hence, the spread is thinner. So that's the basic idea. The more people trading it, the easier to get out. That's why the spread. There are more buyers for every seller. Which platform do you use to look at those candles? I'm using TradingView. This is TradingView.com, and you can find my indicator setup on Option Swing if you're a part of the community. If you're not, then you know what? Just email me at Everyday Growth ADV, and I'll send it to you. everydaygrowthadv@gmail.com. All right, guys. Well, it's 20 minutes till the market opens. I'm going to end the stream here. Thank you guys for tuning in. Subscribe if you haven't. Leave a like. Comment, please. I love to read you guys' comments. So, stood out was the other thing that stood out was bid ask considerably most were $1 plus participants. First part to the question. Where's the first part? Alan, I'm not sure what you were asking here. Let's see. The thing that stood out was the bid ask was considerably closer than every other option available. Most were $1 plus. Yeah. So if the bid and ask are considerably closer than every other option. Wait, am I missing something here? The indicator setup is in the Everyday Growth channel. If you scroll up, or actually just go in here and just type indicator setup, and you should be able to find it. Oh, it's lagging right now. What do you think about ENTH down 16%? Ooh, ENTH. Isn't it NPATH? No, isn't it ENPH instead of? Is it N phase, or is that the right ticker symbol that you gave me? ENTH or ENPH? ENTH doesn't exist. Let's see. I'm trying to show you where the indicator setup is. Okay, so indicator. Let's see if you type in and then Everyday Growth and then indicator setup, it should come out. No, indicator, and then you scroll down. Here you go. There it is. You just type in and then semicolon Everyday Growth, and then you type indicator, and it's this post right here on the 2nd of September. Sorry, February 9th, my bad. And then you can see my indicator setup. ENTH, eHealth. Oh, okay, let's see, eHealth. Okay, just found it. Whoops, sorry, TradingView doesn't allow me to see that right. Oh, this is interesting. Why did it, I wonder why it sold off. So you have to ask that question first. The fact that I don't know nuts about this company, I'm going to try and find out right now. eHealth. EHTH. Yeah, it's down 15.5%. Why? Why is it down? By the way, if you ever want to find out why something is down, go to Seeking Alpha and then go type the ticker here, EHTH. By the way, Seeking Alpha is one of my most favorite platforms to use. Oh, there you go. So Muddy Waters is short eHealth. eHealth. Muddy Waters is the same company that It's the firm that also said IQ was a fake and Luckin Coffee was a fake. Muddy Waters said in a new report note that they are short eHealth, noting they believe to be a stock promotion with an unprofitable business that is masked by Mark II model accounting. So once again, another speculation by Muddy Waters and send the stock tumbling. Well, it kind of depends on what the truth is right now. So this would be a good play to perhaps capitalize if it kind of dips too low. You can jump in and take some money from the bounce upward, because this is a nice setup for a long term. It looks good. So I would say play it conservatively. Take a small position. All right. Well, thank you guys for tuning in. I will catch you guys on Friday. Thank you. Goodbye.